Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Travere Therapeutics Inc. Annual Report. Travere Therapeutics, a biopharmaceutical company, specializes in developing therapies for rare kidney and metabolic diseases in the United States. Their product portfolio includes FILSPARI, sparsentan, a medication targeting IgA nephropathy, and Thiola and Thiola EC, tiopronin tablets for treating cystinuria. The company's clinical stage programs focus on sparsentan, an investigational treatment for focal segmental glomerulosclerosis, and pegtibatinase, a human enzyme replacement candidate for classical homocystinuria. Additionally, Travere Therapeutics has partnered with Pharma Cristo Limited to advance the cystinuria program through preclinical activities. Travere Therapeutics services include developing and delivering therapies for rare diseases, conducting clinical trials, and collaborating with other companies to advance research and development. Their expertise lies in identifying and addressing unmet medical needs in the areas of kidney and metabolic disorders. Travere Therapeutics, Inc., TVTX, has experienced a remarkable surge in its stock price over the past year, with a notable growth of over 110% in the last 6 months of 2025. This significant increase can be attributed to several positive news events related to its kidney disease drug, FILSPARI sparsentan. The U.S. Food and Drug Administration's FDA acceptance of Travere's supplemental new drug application, SNDA, for focal segmental glomerulosclerosis, FSGS, in May 2025 was a major catalyst for the stock price increase. In addition to the FDA's approval, the European Commission granted standard marketing authorization for FILSPARI in adults with primary IgA nephropathy, IgN, in Europe in April 2025. This milestone led to a $17.5 million payment from collaborator CSL Vifor and marked a significant achievement for Travere Therapeutics. The company's strong commercial performance of FILSPARI in IgN throughout 2025, with robust sales growth and financial results, further contributed to the stock price increase. Travere reported exceptional third quarter 2025 financial results, exceeding forecasts by 56.2%, and preliminary fourth quarter 2025 U.S. net product sales for FILSPARI were approximately $103 million, marking a 108% year-over-year growth. The company's strong financial performance, combined with the positive news events, has driven the significant increase in its stock price over the past year. The cumulative effect of these positive developments and strong commercial performance throughout the past year has contributed to the overall significant increase in Travere Therapeutics' stock price. While a temporary decline occurred due to the FDA's extension of the PDUFA date for FILSPARI in FSGS, the long-term outlook remains promising for the company. Travere Therapeutics, Inc. maintains a market capitalization of $3 billion, broadly in line with the industry peer group. Travere Therapeutics, Inc. trades at a higher price-to-book ratio of 24.06 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company exhibits a very high leverage profile, with liabilities accounting for 90% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth for Travere Therapeutics, Inc. are the commercialization of its products, including FILSPARI and sparsentan. This has led to a significant increase in revenue from $233.2 million in 2024 to $490.7 million in 2025. In addition to revenue growth, the company's net loss has decreased from -$321.5 million in 2024 to -$25.5 million in 2025. This decrease is attributed to increased revenue and reduced operating expenses. The divestiture of its bile acid business to Mirum Pharmaceuticals in August 2023 also contributed to the reduction in net loss. The company's focus on identifying, developing, and delivering life-changing therapies for people living with rare kidney and metabolic diseases has driven its growth. With a strong product portfolio and increasing revenue, Travere Therapeutics is well-positioned for continued success in the future. The net income of the company experienced a significant decrease in 2023 due to the sale of its bile acid business. This resulted in a gain from discontinued operations, which negatively impacted the company's bottom line. In contrast, the profit margins were expected to be negatively affected by various factors such as competition, regulatory initiatives, and trade disputes. However, there is also a potential for improvement in profit margins due to reduced costs and increased revenue from milestone payments related to the sale of the bile acid business. Additionally, successful commercialization of products could lead to improved profitability. Despite these uncertainties, it is clear that net income has decreased, while profit margins are expected to be negatively impacted by various factors. The company's financial performance is a positive indicator of its overall health. One key metric that supports this conclusion is the generation of positive operating cash flow. This means that the company is able to generate more cash from its core business activities than it spends on operational expenses. According to the financial statements, as reported on page 83, the company's net cash provided by operating activities for the year ended December 31, 2025 was $37,784,000. This significant positive figure confirms that the company is indeed generating positive operating cash flow. The company's debt level has undergone significant changes over the past few years. As of December 31, 2025, the total debt outstanding was $490,363, a decrease from $535,048 in 2024 and $508,675,000 in 2023. The convertible debt also saw a reduction from $378,988 in 2024 to $311,724 in 2025. This decline in debt level is evident across various categories of marketable debt securities. In terms of interest expenses, the company experienced a slight decrease of 3.9% in 2025 compared to previous years. However, no specific information was provided to compare interest expenses between 2024 and 2025 directly. Nevertheless, the overall trend suggests that both debt levels and interest expenses have been trending downwards over time. The company has shown significant improvement in its financial performance over the past 2 years. In terms of revenue, the company saw a substantial increase from $145.2 million in 2023 to $490.7 million in 2025, indicating a strong growth trajectory. This growth is not limited to just 1 year, as the revenue has consistently increased each year. The net loss also shows a significant improvement, decreasing by $296 million from -$321.5 million in 2024 to -$25.5 million in 2025. This reduction in net loss indicates that the company's financial health is improving, and it is on track to become profitable. Overall, these numbers suggest that the company has made significant strides in its performance over the past 2 years. Management's outlook and strategy. The company's management is optimistic about its financial prospects, citing sufficient cash reserves to fund operations beyond 12 months. However, they acknowledge potential challenges, such as revenue fluctuations from marketed products and patent costs that may impact their performance. A key area of focus for the company is advancing its clinical trials, particularly Phase 3 programs for sparsentan. Management is also preparing for the launch of FILSPARI in FSGS and a potential commercial launch. To achieve profitable operations, they aim to manage revenue growth, control costs, and mitigate the impact of factors beyond their control. Management's strategy emphasizes the importance of balancing business expansion with cost management. They are aware of inflationary pressures affecting labor costs, but remain focused on achieving regulatory approvals and launching new products to drive future growth. Overall, the company is positioning itself for long-term success by prioritizing clinical trial completion, product launches, revenue growth, and cost control. The company's financial performance has been scrutinized through various summaries. One notable aspect is its dividend policy. According to the extracted information, the company has not paid dividends in any of the mentioned sections. This suggests that the company may be prioritizing other uses for its profits. Another key point is the company's share buyback activities. While some sections do not mention share buybacks, there is a clear statement indicating that no shares were repurchased during the 3 months ended December 31, 2025. This implies that the company has chosen not to engage in share buybacks at this time. That concludes the financial summary for Travere Therapeutics Inc. Feel free to comment below, and I will be happy to answer them when possible.